Cathie Wood's Ark Investment Management has also announced that it holds a stake in OpenAI through its venture fund in a bet that the AI industry will remake the tech landscape.
AI software is going to revolutionize knowledge work, and $13 trillion is going to be spent on AI software, and $3 trillion of that is going to flow into kind of what we think of as foundation models. So OpenAI and Anthropic are the two most prominent examples with the best models in the marketplace, both of which are in the venture fund. And $3 trillion translates into an expectation for around $16 trillion in market cap attributable to those foundation models. So to give you context, the global equity market is a little more than $100 trillion as of the end of last year.
Right.
And so 16 trillion, it's a big chunk, almost sector sized in terms of our expectations for enterprise value footprint.
$16 trillion by 2030. That's an arresting figure when you think of the overall market valuation for these foundational models. Do you wish you could access more OpenAI and ultimately Anthropic as well, when you're thinking of the rest that makes up the fund, when I'm looking at SpaceX, but Epic Games as well, Freenome Holdings, Relation Therapeutics? How much do you want foundational models, the AI bet, to take up of this fund?
Well, the way we think about it is there are 5 major technology platforms entering the marketplace, and each has the potential for amazing compounding returns. And you're better off constructing a portfolio that has, yes, AI exposure, and autonomous mobility exposure and multi-omics exposure, because those exposures could independently fail. Like, are we 100% right on AI? I think it's going to be an amazing revolution. But if that drags out to the right, it's unlikely that cryptocurrencies also will drag out to the right. So by exposing yourself to a number of innovation platforms, you actually end up with a more efficient exposure to innovation as a whole that delivers better returns. The decision to invest in these companies is not a decision based upon how it's going to attract attention. It's because we underwrite the positions and we think they deliver, outsized returns, even relative to public market exposure. So one of the benefits of this fund is, we can look at, hey, this is an interesting company, and there's a comparable public company that this is actually cheaper than. And so I think that the potential for returns across all of these technology platforms is really profound, and we want every investor, not just accredited investors, to be able to have access to those returns.
Brett, going back to the OpenAI thesis as one of the winners of the $6 trillion market, but also it's a competitive space right now, and also there's a weird corporate governance structure that goes on over at OpenAI. What are the risks for you on that name?
Sure. I mean, there are corporate governance structures risks, and you can underwrite those. So we've gone through and assessed them, but there is a degree of uncertainty there. There are regulatory risks across all of technology exposures. I think that we look back to even like nuclear power is an amazing technology that was effectively derailed because of kind of the regulatory burdens put upon it back in the 1970s. And there's the potential that could happen with AI as well, where we're worried about something, and so we deny ourselves all the benefits of it, but still take on all of the risks. And we think that there's a room for commercial models like OpenAI and Anthropic's, and open source models like what Meta is developing. I think that the market will have a handful of solutions, any one of which could be profoundly valuable. And when you have this much market opportunity ahead of you, you go for that asymmetric return, where kind of like the 1 or 2 winners here are going to be profoundly valuable, and so we think an exposure is appropriate and actually necessary.